So today we're very excited to have with us Holly Chase from the Pennsylvania Housing Finance Agency. She is a seasoned financial educator, writer, and presenter specializing in community-based financial education for adults. She has worked with national, state, and local nonprofit organizations and government agencies in the areas of financial education, program development, training, and outreach. She's trained over 1,700 educators, counselors, and social workers in financial content and delivery, and delivered over 200 financial education workshops to Pennsylvania consumers. She's currently the Financial Education Officer with PHFA. In this capacity, she leads the financial literacy initiatives in training across the organization, including housing counseling and education, housing services, and mortgage servicing divisions. She also provides professional development, curriculum, consultation, and outreach to national, state, and local housing community stakeholders and partners. And today, introducing the webinar is Aaron Bernstein, Representative Aaron Bernstein. He represents the 10th Legislative District, which is parts of Beaver, Butler, and Lawrence counties. Like many citizens raised in Western Pennsylvania, Aaron Bernstein was instilled with the traditional values of hard work, personal integrity, and community service. For the 2017-2018 legislative session, Aaron serves on the House Aging and Older Adult Services, Finance, Health, and Game and Fisheries committees. Prior to running for state representative, Aaron divided his professional time between his work for ADP in the field of human capital management, his small businesses, and the 107-acre farm where his family raises livestock. He will bring his experience and understanding of small businesses and the challenges they face to Harrisburg as he fights to strengthen the state's economy. Aaron, I'm going to shoot it over to you so you can just welcome everyone to the webinar today.
Thank you, Tori, so much. I really appreciate the opportunity to introduce and really sort of kick this webinar off. First and foremost, I want to thank the PA Housing Alliance as well as Holly from PA Home Finance Agency. Whenever we had some previous conversations, we had talked about the importance of home ownership. And actually today, I spent some time with the United Way. And I think everyone on this call would agree that the ultimate goal is to allow people to go out and accomplish that American dream, whatever that American dream is for those individuals. Whenever I do a lot of reading, whenever I was going through just some different books last night, I was reading and really understanding this country, and whenever we first started, two centuries ago, and really property ownership was a major component of that, and that's why a large number of people, those were the ideas that this country was founded on, property ownership and home ownership, and allowing people to go on and achieve that. So I just wanted to thank you for the work that your organization does and for the people that are on here listening to the call, as well as Holly. It's really important that we take this message, not just for the people on this call, but for everyone else that we may be in contact with, and provide them the available resources that your organization has in order to allow them to have to achieve the American dream. So I wanted to thank you so much for allowing me to be part of this. And I know Holly has a lot of really great information that people are going to find some significant value in. So thank you so much. And I look forward to participating in future events as well as listening to the remainder of this webinar.
Great. Thank you, Representative. Really appreciate it. And again, thanks for joining us today. Holly, if you want to take over for us and begin the presentation, that would be great.
And take it from here. Okay. Thanks, Tori. I want to thank the Pennsylvania Housing Alliance for sponsoring this and inviting me to come and talk about the American dream and making it possible. Just a couple of names, a couple of things. I was really pleased to see some familiar names on the people who are listening in to the call today. And I think we know that it's impossible to talk about home ownership in its entirety in 30 minutes or so. But what I'd like to do is sort of focus on the financial realities of how to put yourself or how to put your clients in the best possible position for successful long-term home ownership. Okay, next slide. So today we're going to talk about some of the pros and cons of homeownership. Are you financially ready now and later? Some basic steps to the process. We're going to look at a few programs and services available to help home buyers, and then some additional resources for you to take out to your constituency and your clients. Next. So let me ask you, what do you think of when you hear the word home? We may think of dinners on Sunday dinners at the table overlooking the dining or overlooking the backyard with the tire swing. We look at happy families. We look at relaxation and enjoying time with each other. That's great. This is what we think of home and home ownership. But what we really want to do is sort of step away from what we think about it and look at what we know about it. Next. And I do have to say some of the animation in the PowerPoint, we're having some technical issues, so please be patient and bear with us with this. So the pros of homeownership, the financial incentives, you are building an asset. I think that's first and foremost what people think beyond the family thought process. It's a place to call your own, you're establishing roots for your family, and you are part of a community. And as anyone who has gone through the home buying purchase process, you know that it takes a lot to get there and to stay there. So it's a big accomplishment for many people in this country, and it's a real sense of pride. Next. So the cons of home ownership in a nutshell, I'm just going to say upfront and ongoing cost. It is more expensive to own a home and to maintain a home, both physically and financially. There's decreased mobility and the possibility of foreclosure if you're unable to meet your mortgage loan obligations. Next. So when we're looking at the possibility of home ownership and we're talking to our clients or our consumers that we're working with, the real question is, are you ready? Are you ready to face those upfront costs, which part of it is a down payment, typically 3 to 20% of the purchase price, depending on the loan program that you're involved in. And then there are all these closing costs, which I'm just going to say typically 6 to 8% of the purchase price, which includes the loan fees, getting a home inspection, homeowner's insurance, taxes, and the like. And then last but not least, moving in, you're going to want new appliances, furniture, decorations, and things like that. So are you ready to face those costs right now? Next. But then, and probably more importantly, are you ready to face the higher costs that are going to be associated as an ongoing homeowner? So you will be paying higher utilities. Most homes are bigger than apartments and what have you, so you're definitely going to have increased expenses in the utilities. Then there's the maintenance, regular, mulching and flowers and cutting the lawn and taking care of the little things. And then there are these major repairs, which is really can be daunting in many situations where there might be a new septic system that needs to be done or the electrical system overhauled or heating systems. It's really a pretty big deal when you're looking at these major repairs, tens of thousands of dollars. And of course, taxes. Even if you have a fixed rate mortgage loan, your taxes, if you're escrowing your taxes as part of that payment, are definitely going to go up. I'm really not familiar with taxes going down at any time, but so you have to be prepared for the increase in your monthly payment. Next. So when you look at that, when you talk about all the pros and the cons, and again, especially the higher cost being ready now and later, if you still decide, or our clients still decide that it's time to buy, which is not a bad thing, I don't mean to be negative, but next, there's one thing I want us to remember, that purchasing a home is probably the largest financial transaction of your life, certainly the largest credit transaction of many people's lives, so you want to get it right. Next. So here are the overall steps to home ownership: knowing your money, shopping for a lender, finding a house, preparing for settlement, and move-in and maintenance. Again, this is an oversimplification of the process, but we're really going to focus on the financial aspects, and we're going to start with knowing your money. No, we know, and many of the people on the call I've worked with before, and what I like to coin is we really need, before we go and buy a physical house, we need to build our financial house first. And there are many, many areas of our financial house that should be addressed. But specifically for home ownership, these are some key areas that are just essential that we have control of prior. So it's knowing where you stand, how much you can afford, and how's your credit. Next. So where do you stand? What comes in? Where does it go? What do you have? What do you owe? It's kind of like a Dr. Seuss phrase, but really what we're talking about is net worth and cash flow. Next. So let's talk about this cash flow. It's income minus expenses. And we really want to get a good idea of your income sources. And you can read the screen here, and wages, interest, pension, disability benefits, and what have you, which is great to analyze now. But I want us to really help our clients and our consumers think about long-term income stability, because that's really going to help the idea of long-term stability in home ownership. You've got to be thinking, especially if you're working with somebody who hates their job or really doesn't like what they're doing, that's going to have an effect somewhere down the road if their income, if their jobs don't work out. So it's really getting our clients to think about the long term. And I think I would rather see, this is personal opinion, I'd rather see somebody, put off home ownership for a year and get involved in a career that they're going to be happy with, that they're going to, really enjoy and put time and be successful in, because that's going to mean long-term income stability for them, and again, ultimately successful long-term home ownership. Next. Then, of course, where are your expenses? Where does it go? What comes in? Where does it go? Excuse me. And these are our typical expenses: housing, food, clothing, all of our needs, in addition to, transportation to get to work so we can make money, so we can pay for housing, food, clothing, and then personal care and gifts and donations and what have you. I think what we should strive for in helping our clients is really to, of course, help them analyze what they're living on now, what they're spending now, but ask them if this is, in fact, the lifestyle that they want, they envision with home ownership. Case in point, if somebody likes to go out to dinner all the time, and that might have to change upon home ownership because of the expenses. So we want to give our clients the benefit of the doubt to set their own reality of what kind of life they want to live, and bring that into the reality of home ownership. One other thing that's important to understand about looking at your expenses is how you're actually paying for them. Are you paying cash, check, or a debit card from your account? But most importantly, are you using the credit card to pay for it and not paying it off at the end of the month? Because that can signal overspending, and of course that's not what we want to see in preparation for home ownership. Next. So our cash flow, so what comes in, what do we owe, can be positive, and it's great. You can do the happy dance. You've got some extra money left over for additional savings, or buying furniture, or having an increased standard of living. That's terrific. If your cash flow is even, income equals expenses, or especially if it's negative, this might be a chance to say, take a step back and rethink home ownership until the cash flow situation improves. Again, we don't want to put ourselves, get ourselves involved, or see our clients be involved in anything but their own success in home ownership. And if their cash flow is even or negative, that could be a sign of not being fully prepared. Next. So let's talk about net worth, which is important to look at what you own right now. We have financial assets, which might be cash, stocks, bonds, mutual funds, real property, which if you're obviously a first-time home buyer, you won't have, but that includes land as well. And then our personal property, our cars, our bling, our clothes, all of the things that we own, important to take a look at. Next. And it's important to have a mixture of these things. The biggest asset that many families have in this country is their home. But their home isn't, there's no cash closet in the home. I checked my house, every bit of it, and I'm telling you there's no closet full of cash. So it's not something that's accessible. And to sort of drill down this point is what happens if you lose your job? If there's no job, how are you going to make the mortgage payment? How are you going to buy food, clothes, take care of the kids, all that kind of stuff, if you don't have other resources? And those other resources are other assets, cash, and again, the financials, maybe some bonds, stock market, stocks, or mutual funds, and what have you. So it's really important that we diversify and not put all of our eggs in one basket, not put everything we have on the table just to buy a home, because we're compromising our ability to keep that home over the long term. Next. So our net worth, part of our net worth is what do you owe? What are your debts like now? How are you handling, how have you handled other people's money? It's not your money, it's other people's, through loans, whether it's car loan, student loan, personal, et cetera, and credit cards. You may owe child support, which really has to be taken care of before purchasing a home. If it's back child support, there might be legal obligations that you have as well. Next. So again, our net worth is positive, even, or negative. You can, if you own more than you owe, if it's a positive number, that means that's great. You're going in the right direction of building your wealth. And wealth means different things to different people, but you're building more ownership than debt. If it's even or negative, that might be an indication that it's time to take a step back and say, how can I improve this before engaging in homeownership? Do I want to go, into even more debt when I don't have the debt that I have now sort of under control? So it's important. And again, if we take a step back, build up our savings, pay off some debt, you're going to be in a much better position for successful home ownership in the long run. Next. And our net worth really is a key to financial stability. We want to own more than we owe. We want to have a variety of things that we own, and not be in over our head with debt. And we saw back in the 2008, 2009 with the financial crisis, many home values were going down, and homeowners were what's called underwater. They owed more than their home was worth, and that's really sort of a very negative, drowning feeling. So we want to have a positive net worth, which is our key to financial stability. Next. Okay, so after we quote-unquote know our money, and again, there are many other aspects to our financial situation, we have to ask ourselves how much we can really afford. And the key word here is comfortably. What are our debt ratios, we'll talk about in a minute, and what about the cash we have on hand? Because that's going to lead us to how much we can afford. Next. Let's talk just, for many of you, this is a review, but lenders are going to look at a couple of things when determining how much you can afford, meaning how much you can borrow for this loan purchase or for this home purchase. So the first is the housing expense ratio, which is your housing expenses, your potential mortgage payment, with your taxes and insurance divided by your gross monthly income. And we're looking at a guideline of around 28%. And then what the lenders are going to do is they're going to look at your housing debt plus all of your other debt included on a monthly basis. So your credit card payments, your student loan payments, your car payments. Divide that by your gross monthly income, and you're going to come up with the guideline about 36%. Now, these are not hard and fast numbers. I have to say different loan programs have different allowances and different ratios. But one of the things you have to think about is, these are guidelines from a lender. Are you yourself going to feel comfortable with 28% of your gross income, now we're talking gross income, going towards housing payments? And how is that going to affect the other living expenses that you have, including your other debt, and going out to eat and buying, buying clothes for the children and anything else that you need? So you have to analyze your own situation, calculate your own numbers here, and say, can I really live on that amount given towards my house and given towards other debt? Next. And I think here's the real kicker, one of many, I guess, is how much cash do you have on hand? You're going to need money for the down payment, so that's money gone right there. But then remember those move-in expenses. You, in theory, don't want to take on any more debt when you move in. And what I mean by that is, borrowing money for appliances or any of the other upgrades you may want, redoing a kitchen or just buying consumer goods that you'd like to add to the house. It's better, if you can pay cash up front for that. Again, having a home is a big responsibility and a big debt, and you have to think of the thought process of trying to minimize that once you move in. And for those of you who have ever purchased a home before, as soon as you move in, you're going to get all these advertisements and applications for additional credit because, hey, if you have a house, lenders say, why not? You're good credit risk. We're going to extend more credit to you. The most important part about cash on hand is that after the closing process, after the move-in process, that you have 3 months of mortgage payments saved up in reserve. 1, 2, 3. 3 months. It may seem like a lot of money to have saved up somewhere, but realistically it will go quickly if something happens and you're out of work for 3 months. This just gives you a comfortable cushion, and it's really part of the strategy, again, for long-term successful home ownership. Next. So the last part of knowing your money is how's your credit? How have you met your obligations in the past? So we'll look at a couple of things next. And we'll look at it in terms of a lender. Lenders look at the 5 C's of credit. They look at if you have the capacity to pay back the loan, or what's your income. Do you have capital, again, for those down payments and perhaps a cash reserve? What's your character? How have you met your obligations in the past? And they're also going to look at collateral, which we'll talk about in a minute. But collateral is the home itself as a guarantee of payment. If you don't meet your mortgage obligations, they can, and I don't mean to be joyous about it in any respect, but they can foreclose on the home to take care of that obligation. Last but not least are conditions, and we saw this really coming to a head back in 2009 and later as economic conditions really tightened up and it was harder to get a loan. Condition isn't something that we can necessarily control, but it is going to affect our ability to borrow. Next. Okay, so how do we know how we've been doing with our credit? Hopefully no collection calls or late notices or fees. But we can look at our credit reports, and this should be done at least once a year from all of the credit bureaus. We're not going to go into details. Again, part of all of what we're talking about here is involved in a comprehensive home buyers workshop where we'll talk about these issues in depth, and we'll look at some resources in a bit. But looking at your credit report is your overall snapshot of how you've used other people's money. It's compiled from information from creditors. So as you are paying your bills, applying for credit, all of that information is being sent to the credit bureaus. And one other thing that's important to note is your credit report is individual, it's not joint. If you have a joint account with someone, the information will be put on yours as well as the other joint owner. Next. But really what we're interested in is credit score because we're all about the numbers. Credit scores basically are, it's a number that represents how likely you are to repay a loan. And the credit scoring companies are very good at this. They've created this statistical program using the qualitative and quantitative information in your credit report to generate that number. So what's in a credit score? How's it reported? So next. 35% of your credit score, and these are generalizations as well. This in particular is the FICO model, which is the Fair Isaac Corporation, which they developed a very popular scoring model. 35% has to do with your payment history, and 30% is the amount of debt. So if you're looking at the main factors in your credit, it's pay on time and lower the amount of debt you have. Those are two very key practices that we want to engage in when using other people's money. 15% is length of history. It is what it is. You've been using it for as long as you've been using it. 10% the type of debt, mix it up, use what you need. In a scoring situation, secured debt is a little bit seen as a little bit higher because it's a little bit harder to get. So, but the key really is use what you need and don't have accounts that you really don't need. Next is new credit, 10%. Oops, we can go back. 10%, which is how many times you've applied for new credit. And lenders don't want you to, when you're in this home buying process and you're, looking at credit, if you're opening up all the Home Depot cards and the Lowe's and the furniture stores, that's going to look negatively upon your overall debt position. So you need to be very cautious about that. This is getting back to the types of debt. Use what you need, but be very cautious in that. One of the things that I wanted to just sort of remind you and hopefully remind your clients of is that we're not chasing a credit score. I've seen people in my days of doing home buyer workshops that they'll do everything they can to get that credit score up prior to applying for a mortgage. But once they have the home, once they've closed on the mortgage, the practices sort of go to the wayside. Because I've done it just for that buildup of credit score for the application. But again, we need to, for successful long-term home ownership, we need to make sure that we stress to our clients and consumers that we chase good credit histories and keep up the good credit behaviors because that's going to help in their financial stability and, again, successful home ownership. Next. So keep in mind, we're going to remind you again, purchasing a home is probably the largest financial transaction of your life, so you want to get it right. Next. So assuming now that we know all about our money, let's talk a little bit about lenders. Next. Shop for a lender. Use the rule of three. Go to at least 3 places to shop around. You don't want to, stick with one. You want to be able to compare your situation. So let's look at the types of lenders out there. Next. You can go to your bank or credit union. They might be providing mortgage loans. A great place to start, and there may be benefits as a deposit account holder to using those. There are mortgage bankers that basically that's all they do is they take their money and lend out for mortgages. And then finally there are mortgage brokers that can shop around to many different lenders and place you in a mortgage. Next. A couple of questions to ask a lender. Again, remember this is the largest financial transaction of your life. Look at the loan officer qualifications. What's their experience? Are they new to this business, or do they have, many years of working with, especially first-time home buyers? Take that time to understand the types of mortgages offered, terms and conditions, and we're really not doing any justice to that subject right here. But again, that's when you're sitting down and talking with a lender, we should, make sure that you're going over that with a fine-tooth comb to find the product that's right for your situation. Make sure you inquire about local first-time homebuyer programs. As I mentioned before, there might be special offers as a deposit customer, maybe a lower interest rate. And then finally, check with the Pennsylvania Department of Banking and Securities to check the licensure, enforcement actions, and any complaints against the lender. Next. Oh, here we go again. Don't forget, purchasing a loan is probably the largest financial transaction of your life. You want to get it right. I hope I'm making a point. Next. So after we've potentially found a lender, what you'll want to do, and really important, we're doing all of this financial stuff before even engaging and looking for a house, is getting that pre-approval letter. There's a difference between pre-qualified and pre-approved. Pre-qualified is simply looking at an informal look into what your income is and what your debts are to calculate your ratios. It really doesn't give you a great starting point, but it doesn't mean too much in an official capacity, whereas being pre-approved is different. Pre-approved means you've talked to a lender, you've provided some basic information, pay stubs, maybe tax returns, so that the lenders have a pretty good idea of what your financial situation is and would be, pretty sure that you would be approved for a mortgage. You would actually get a letter form. One thing that's important is how long is this valid. It might be good for 30 days, might be good for 60 days. So getting that is really important because after you get that pre-approval letter, next, then you can find a house and make an offer, which is the next screen. And we'll sort of move quickly through these. Finding a house, this is the fun part, and this is the part that most people do first, which, all the financial stuff is boring, or could be boring, but this is the fun part. But we want to make sure we have all our ducks in a row before we do this, especially that pre-approval letter. So let's go through some basic steps to that. Go ahead, next. So what's on your wish list? What do you want from a home? Where's the location? You've probably heard the phrase location, location, location. It's going to be a lot of things to consider with if you have kids, school districts, your commute to work, all those things. Look at the mechanical systems of the house. Do you prefer public utilities, or are you okay with being out in a little more rural area where you have your on-site well and septic systems? Also look at heating systems, things like that, the number of bedrooms and baths. What kind of amenities are you looking for? So you really want a fireplace, or is a patio something on your wish list? The thing to point out with all of these when you're making your list out is what's non-negotiable. Is a minimum of 3 bedrooms, is that non-negotiable because maybe you have children or maybe you're planning to have children in the future? It's really important to know what would be a deal breaker in finding a home. Next. See what's out there. This is one of our screens. We had some transparency issues, but you can do this. You can see what's out there on your own. There are many good websites that tap into the real estate market and let you know the houses in your neighborhood, and they have a slew of information too about taxes on the properties and some really great resources. Home Hub PA is with the Housing Alliance's wonderful website of resources, especially for professionals. Then there's Realtor.com and Zillow and things like that. This is not an advertisement. This is just saying. Newspapers and dedicated publications you might see at the grocery store or in a restaurant have a lot of good information about what's out there. And then, of course, you can work with a realtor. And we're not going to go into the process of working with a realtor because we would spend a whole lot of time on that. But we're just going to mention that that's what people normally do when they're going to go forward and make a purchase. Next. Really important, once you find that house, tour it and review. View the property daylight and evening. One thing interesting about viewing something in the evening is the amount of street lighting, which you can have an absolutely beautiful neighborhood, but if the street is completely dark at night, that might mean night driving can make it a bit difficult. So these are things you have to think about. Looking at the seller's disclosure statement, really, no one should buy a house without going through that in depth. And then as you're touring the house, record some observations. Is there something that needs to be repaired? Is there something that you would change? Because remember, you're trying to estimate any additional move-in costs that would be required and any cosmetic things that you'd want to do with it. And then compare all of those items to your wish list. Next. Making the offer, this is the next important step. Make sure you get a comparative market analysis before you decide on an offer price. And what that is, it's a comparison of other homes in the area based on size, amenities, and things like that, and how much they are listed for sale and how much they've actually been selling for to make an informed decision on your actual offer price. Estimate your loan payments, closing costs, all of that stuff before you sign on the line. Make sure you have contingencies that need to be put in, whole house inspection, lead paint if it's an older home, radon perhaps. Make sure that the seller is in agreement with any assistance programs in advance. So if you're going with a local down payment and closing cost assistance, make sure they're okay with that, because it might mean some additional inspections or additional paperwork. And then last but not least, this is really important, make sure that the seller assistance, hey, we're helping you with closing costs, make sure that it doesn't cost you more in financing. I've seen that many times where we will throw in the seller assist if we get a full price offer, which is going to change the amount changing the amount perhaps of a loan. So you don't want to be financing that assistance, because then you're really not getting too much. Next. And hopefully your offer will be accepted. Wouldn't that be wonderful? Next. So the last two things are going to go pretty quickly. Prepare for settlement. Next. Which is oversimplification of the process. You're actually going to go make a formal mortgage application. You're going to schedule that home inspection, shop for homeowners insurance, arrange for title work, do that final walkthrough, go to closing, and sign. Next. But wait a minute, there are a couple of things to consider in the closing process. If the lender's appraisal of the property comes back lower than your offer price, you've got a decision to make. You either have to kick in extra money to make up that difference, or decide, wow, this is a property that I'm valuing more than it's worth. So it makes you kind of get to that caution point. If the seller refuses to make safety repairs, okay, then you've got some issues again with your lender, because that's, the loan won't go through if that's going to be the case. If the seller offers a lower price after the inspection, for example, let's say it comes in, oh, you need a new roof, that's fine, we'll drop the price $10,000. We have to remind our clients that they still are going to need a new roof, and they're still going to have to come up with that $10,000 for the new roof. So a lower price, there are complications and implications of accepting a lower price. And then last, if the seller wants to make repairs without your approval of the contractors or materials. Look, if I'm selling a house, I don't want to put any more money out than I have to, so I may not, if we need a new roof, I may not go with the long-term architectural beautiful shingles. I may just do, quick and dirty, what's least expensive, and at least it's a brand new roof. So you want to be involved in that process. All of these things that we just mentioned right here can actually cost you a lot of money in the long run if you don't take serious consideration of them. Next. Welcome to Homeownership. You've made it. Next. It's not that easy, though. We have some animation issue here, but just remember that this is the time to learn how to make repairs. It's a time to have a safety plan in place, especially a fire escape plan. Make sure that your earnings stay stable, that you keep yourself organized, that you check your taxes, because owning a home may affect your taxes in a positive manner. If you forget and are starting to live beyond your means, go back, review your needs versus wants. Stay healthy. If you stay healthy, that means you're most likely going to have a good job or keep your good job. Make the mortgage payments on time, and last but not least, don't forget to continue to save. Oh wait, really the last is, if you have questions, reach out and ask, which just gets into our next portion.
Sorry, I'm just having technical issues on my end. I'm hoping to get it up and running again. Sorry, in a couple seconds.
And I'll just continue with talking about the resources that are available. We at PHFA have a financial education website. It's called Building Your Financial House, and we're in the process of creating it and completing it. But it's Building Your House, buildingyourfinancialhouse.org, and there are over 40 worksheets that you can use to actually build your financial house before buying a house. So I encourage you to visit that. PHFA, we have a whole network across the state of nonprofit organizations, and I see many of our agencies are actually on the call that offer wonderful home buyer workshops and housing counseling to really help you and your clients get prepared one-on-one for this process. Also, our website has a complete listing of loan programs that we have You go to a regular lender, a participating lender, to make the whole loan process. But then afterwards, we bring the servicing in-house here at PHFA, and we have a great reputation of our servicing. We work with homeowners. We try to bring them the most resources to help them maintain and avoid foreclosure. So I encourage you to look on the phfa.org website for that. And then last but not least, the local assistance programs. I mentioned before homehubpa.org has a wonderful resource of assistance programs by each county, additional resources for realtors and lenders. It's a great sort of professional, homeownership professional hub, if you will, to find out answers to your questions so that we can help our clients. Again, the main idea is to maintain long-term homeownership. If you could just keep going through, because I pretty much mentioned all of that. There you go. This is our PHFA's website, lending products, and Home Hub is next. Here's the homepage on Home Hub. Here are some additional resources that we have available in-house, brochures that you can share with your constituents. Next. Okay, so we're going to wrap up quickly here. We talked about the pros and cons of homeownership, being financially ready, which again is pretty much the concentration of this, because that's the key to long-term homeownership, and we want to see our clients, we want to see our consumers in stable housing. It's so important. We talked about some basic steps, really not doing the whole process justice, programs and services, and some additional resources to help. And the final point I want to make, the last thought is purchasing a home is probably the largest financial transaction of your life. You can get it right with all of the resources and all the assistance out there. I'm going to end this now. Thank you so much for asking PHFA to be a part of this.
Thank you so much, Holly. I really enjoyed listening to this presentation. I've heard this before, but I always learn new things when I hear it again. I'm going to unmute the line so that people can ask any questions that they have. And also, if you want to type in your question, I can also ask it to Holly on my end. So whatever you feel comfortable with, but just give me one moment as I unmute the lines.
The conference has been unmuted.
So if anyone has any questions, please feel free to ask them now while the lines are open. Anybody have any questions? Okay, well, if you want to follow up with Holly, you can certainly do so. Her contact information is on the screen. We thank you all for coming out today to listen to this presentation. Again, thank you, Holly, and also to Representative Bernstein for opening up this webinar. And thanks again for coming on today, and have a wonderful rest of your weekend.